Well, I think we have everybody around the virtual table. Maybe we can start. We are 3 minutes earlier than the end of the break, but I think it's good to start now. It's a great pleasure to welcome the World Bank Group and the International Finance Corporation, part of the World Bank Group, in the form of Mr. Ashoma and Mr. Zishan, sorry. Wazir, sorry, I have a brain fog, sorry for that. Zain Alphonsus, hello, welcome to the conference. Alphonsus, I hope you are well today. The way we are going to proceed is as follows. First, Alphonsus is going to introduce and remind to the participants what is the World Bank Group and the IFC, and what are the key roles of these two very important institutions, particularly in the field of insurance innovation, and supporting insurtech, entrepreneurship, and financial inclusion. And we'll have then a discussion, the three of us, around these topics with a focus on talking about some of the examples of investments the World Bank Group and the IFC have been making in insurtech related activities, how you guys are supporting reforms in the regulatory and market side of insurance and promoting innovation, etc., etc. So without further ado, Alphonsus, if you want to first take 15 minutes to introduce the role and the activities of the World Bank Group and the IFC. Just tell me when you need me to change the slide, and I will do it.
Thank you very much, Jean-Stéphane, and thank all the participants for inviting us to this very interesting event that you have. Please, Zishan and I are honored to be representing the World Bank Group. And, you know, since generally there's a lot of, when people hear about the World Bank, it means something else to everyone. So I think I would just start by quickly presenting what the World Bank Group really is, so that our participants can understand when Zishan and I are talking, where we're coming from. Thank you. Next slide, please. Okay, as you can see, very briefly, the World Bank Group is made up of 5 institutions. The International Bank for Reconstruction and Development, which principally makes loans available to middle income and credit-worthy low-income countries. And then you have the IDA, or the International Development Association, which offers interest-free loans and grants to governments of the very the poorest countries. And then you have the IFC. I work for the, by the way, I work for the IBRD and the IDA, which is commonly referred to as the World Bank. And my colleague, Zishan, works for the IFC. And the IFC is the private sector arm of the World Bank, and they work principally with the private sector. And then we have MIGA, which is a multilateral investment and guarantee agency. And their role is to guarantee cross-border private sector investments against political risks. And then you have ICSID, which is the International Center for Settlement of Investment Disputes. And they play the role of conciliation and conciliators and arbitrators of investment disputes. Next slide, please. And as you may know, all of this is what we refer to as a World Bank Group. And basically, we have twin goals, which are ending extreme poverty and boosting shared prosperity. Ending extreme poverty is working to raise, to reduce the number of the poor from 18% to 3% by 2030. And when we talk about boosting shared prosperity, we're talking about increasing the incomes for the bottom 40% of every developing country. Next slide, please. Another issue is sometimes when when you come and you say you're working for the World Bank, people think you work for the IMF. Yes, it's also a sister institution, but it's a different institution, and they do something else and we do something else. And what the World Bank does is we work as a source of financing and technical support for developing economies and those countries in transition, while the IMF works with all member countries. And basically, the IMF addresses short-term challenges, and the World Bank looks at long-term development problems. Next slide, please. Now, in terms of the digitalization, the World Bank Group's mission as far as digitalization in Africa is concerned is anchored in what we call the Digital Economy for Africa initiative. And this initiative is very much aligned with that of the African Union, which was prepared with the assistance of the World Bank Group. Next slide, please. Now, when we talk about the Digital Economy for Africa initiative, we're basically talking about support for of the World Bank Group, which is anchored in 5 pillars: digital infrastructure, digital skills, digital platforms, digital financial services, and digital entrepreneurship. Now, digital infrastructure refers to internet and universal coverage. Digital skills addresses the issues of education of people so that they can be able to use the digital. Can you hear me?
Yes, we can now.
Oh, sorry. Okay, so digital skills refers to the skills that are required for the population to be able to use, to be able to operate in the digital economy. So, and then digital platforms, of course, refers to, the various platforms that you need, whether they're government platforms, e-government platforms, or platforms like Amazon, which you need for trading, and, government platforms which are used to offer services to the population. Now, digital financial services refer very broadly to how does technology affect finance in general. So whether it's, today we're talking about insurance, what you refer to as insurtech, fintech, wealth tech, prop tech, all of that comes under digital financial services. And of course, digital entrepreneurship then refers to the support that we give to entrepreneurs in Africa so that they can participate and create jobs within the digital economy. Next slide, please. Okay. World Bank Group support for digital financial inclusion. I see Jean-Stéphane?
Yes. Is it this slide?
Okay, we can go to this slide.
No,
the last slide was talking about.
Hold
the
on,
last slide was talking about the importance of, how digitalization has been important in this era of COVID.
Is it this slide you want to talk about?
Let's go to the next slide. Next slide, okay, please. Okay, thank you. My internet is having a small issue, so please bear with me.
Sure.
All right, so digital the digitalization has been very important in actually improving the levels of digital financial inclusion. And now, when we refer to digital financial inclusion, we are referring to the access of the population to transaction accounts. And most of these transaction accounts within the past decade have actually been spurred by the development of mobile money and other digital facilities. So the World Bank is working to make sure that adults globally should have access to a transaction account or an electronic instrument to store money, send and receive payments as a basic block to manage their financial lives. So this is what we refer to as universal financial access. And the World Bank has committed to enabling 1.7 billion people to gain access to transaction accounts through targeted interventions. And in addition, more than 30 private sector partners pledged commitments towards universal financial access to the World Bank Group. And with the generous support of the British Foreign Commonwealth and Development Office, the World Bank has established a single donor trust fund to enhance financial inclusion through leveraging innovations in retail payments and national payment system modernization, with the goal of enabling the financially included access other financial services, savings, loans, and insurance, etc., that will contribute to helping them work their way out of poverty. Next slide, please. Now, when we come to talking specifically about the insurance sector, the World Bank Group support has been very much focused on development, agricultural insurance. And this has been, and this is being done within what we call the Global Insurance Facility. And this facility was launched since 2009 and aims to facilitate access to finance for smallholder farmers, micro entrepreneurs, and microfinance institutions through the provisions of catastrophic risk transfer solutions and agriculture index-based insurance in developing countries, with the specific objectives of increasing knowledge and understanding and use of insurance in rural and agricultural sectors, strengthening smallholder farmers' resilience to climate and natural disaster shocks, and contributing to small producers' financial inclusion, as well as improving farm incomes. Since by 2020, over 9.6 million contracts have been issued, 48, with 48 million beneficiaries, and with financing to the tune of $1.9 billion facilitated. And we do have more than 450 participants trained in approximately 30 countries. Next slide, please. So what, go to the next slide, Jean Stefan.
This one?
No, the next one, yes. I'm actually using, I'm talking with my phone and reading from the computer. The phone is too small, I can't read from it, and it's faster than the computer.
Okay.
So just to give you some examples, in Zambia, the farmer input support programs, uses electronic voucher system where a code is sent to farmers' mobile phones, which they can use to purchase agricultural products from selected providers. What does this really mean? Just to be very brief, index insurance products are offered to the farming population, and in the event, when there is an event of, say, drought or flood, those farmers don't have to wait for someone to come to visit them and find and make reports, or wasting time and so on. So what happens is, by using satellite technology, Once the information is sent that there has not been enough rainfall or there has been a drought, automatically funds are disbursed via mobile phones, mobile payments directly to these farmers, enabling them to go back and buy seeds and replant. Or in some cases where you have, for instance, if it's in the case of pastoralists who have insured against drought or flood, and there is not enough rainfall, and the pastoralist starts seeing his cattle not being able to eat because there's no more grass, he receives money and he's able to save his cattle by buying other food for the cattle or whatever his whatever stock that he's breeding. So this is the kind of example that you have also in Kenya. And in Senegal, you have feasibility studies to assess the possibility of using technology, mobile phones to facilitate distribution and claims management for national scale-up. And in 2019, there was an innovation challenge, Agriculture InsurTech Forum, which the bank is hoping to replicate in Africa. Next slide, please.
Hi, everyone. This is Zishan here. I'm going to speak briefly about IFC's role in the insurance sector. But before I do that, good morning, good afternoon, good evening to all of you, wherever you may be. And thank you to Jean-Stéphane and the organizing team for inviting me. It's a pleasure being here. So I guess to start things off, at IFC, we believe that similar to what Alphonsus was mentioning earlier, the insurance sector has a huge potential for development impact. Some of the ways it helps economies is through providing risk insulation and better risk management. Essentially, what this means is entrepreneurs, it provides them with more ability to take risk in order to grow their business and grow economies as a result of that. Secondly, it helps people, it just helps generally with poverty reduction by providing a safety net where people don't have to fall back into poverty due to unexpected life events. I mean, there are in many countries, just having an unexpected healthcare crisis could really hit your bank account quite a bit. So that's one of the key areas. Talking about healthcare, insurance also provides and serves as a very useful funding mechanism for healthcare services sector. In addition to that, the assets that insurance companies hold, traditionally they're invested in long-term investments. These long-term investments essentially create more of a space for capital markets development, as insurance companies want more long-term investment products. In addition to that, these assets are invested across a variety of different sectors in an economy, hence leading to a multiplier effect towards economic growth. Then finally, partnerships with global insurance companies can help mobilize more capital for investment in emerging markets. A good example of this is the MCPP program that we have at IFC. Happy to share more details separately about that. Now, these are all the good things about insurance and the big development impact that it can have. But despite that, there's a huge insurance protection gap globally. So just taking the life and health insurance segments, the insurance protection gap there is roughly $700 billion US. So at IFC, we aim to work with the private sector in order to come up with solutions to reduce that gap and also to increase the penetration rate of insurance products across the markets we work in, across the several emerging and frontier markets. Some of the ways we aim to work and the way we currently work with our partners, first and foremost, we focus on capacity building. Capacity building is essentially us working very closely with the senior management teams or the leadership teams of our partner organizations to provide technical advice, strategic advice for better administering their businesses. By the same token, we provide innovative solutions. We work on climate risk and ESG. We also provide a global network of contacts where we can introduce our partners to other service providers and other potential partners for growing their businesses. I guess more on an institutional side, we provide strategic growth capital. And by the same token, we serve as long-term investment partners, which is different from a typical private equity firm, which invests for a given 5-year investment horizon, and then they have to exit. At IFC, we can be longer-term investment partners. In addition to that, what you might already know of, the IFC brand does provide some level of endorsement to our partners, and we also provide political risk mitigation. And within the insurance space, we've committed over the past 20 years about $2.5 billion in 107 projects across 30 different markets. So we've been quite active in this sector over the past 2 decades. We're seeing diverse trends in the insurance sector globally, which presents IFC with really interesting opportunities. One of those trends is digitization, which we're going to talk about in more detail during the fireside chat. But can we move over to the next slide, please?
Sure.
And I'll be really quick here. So introducing the digitization of insurance sector, just spending a couple of minutes here. We see the insurtech space as a key element of digitizing the insurance sector. And we also see it as a great opportunity to have an impact and drive innovation in the insurance sector. Insurtech, at least the way we look at it, represents an ecosystem of early stage companies that are transforming specifically the retail and SME insurance industry, primarily because these have been the underpenetrated segments of the insurance target market. And they do this by leveraging technology and new business models to drive innovation. In addition to that, the COVID-19 pandemic over the past year and a half, it has, in a way, catalyzed and accelerated the use of online insurance. I mean, I just think about it, right? I mean, before this past year and a half, what we all have gone through, I mean, I had never utilized telemedicine or online healthcare. I had never given a presentation over a Zoom call before. But technology has enabled us to do this, and this has become a new normal. And the same thing we believe applies to the insurance sector. So we believe the insurtech space and online insurance does provide immense opportunity given the current state of affairs that we're in. I think, Jean-Stéphane, at this point, I think I'll pause with the IFC introduction, and maybe we can talk about more details in the fireside chat.
Right. So I say thank you, first of all, for the very interesting presentation. We have half an hour to discuss, the three of us. What I would like to start with maybe is to go back to discuss what are the strategic priorities of the World Bank Group, including the IFC, with regard to the modernization of the insurance industry, particularly with regard to digital innovation and transformation, including the regulatory reform, etc. If you could maybe give us 3 of the top priorities that you are driving with regard to modernization and in digital innovation in Africa, that would be really helpful. And then we can have discuss some case studies, the investment you are doing, etc. Zishan, would you like to start with that, or?
Sure, happy to give it a stab.
Please.
Well, Jean-Stéphane, thank you for the question. It's a really interesting question because there's just so many things within the digitization space. It's such a broad space where you can operate in so many different directions. Our current top priorities, to list three, I guess the first and foremost one for us as IFC is to invest in new technologies and insurtech startups. Now, insurtech is a broad space, and we look at insurtech as three different verticals. So the first vertical within insurtech for us would be digital insurers. These are essentially insurers or insurance companies which are completely digital. They provide their customers with a full stack, end-to-end insurance experience, all in a digital format. And the key idea for them here is to provide cheaper products and a much better customer experience than the current traditional model offers. The second vertical for us in how we look at insurtech investments is digital distributors. So these aren't essentially a full insurance company or an insurance per se, but they do provide customers with access to better market intelligence through price comparison, as well as providing potential customers with better education on the different products available in the market. And they do this. They could either do this through integrating with insurance companies or their partners. The key differentiation between the second vertical and the first vertical is that digital distributors do not assume or hold any risk on their balance sheet. They're simply in the business of selling insurance policies and providing information about what's available in the market. The last vertical that we look at is data analytics and technology providers. This is a very interesting area where we specifically work with policy administration platforms or software as a service insurtech startups, which essentially enable traditional insurance companies to better accumulate data and better leverage that data in order to improve their underwriting or claims payment processes. In addition to investing in insurtechs, the second priority for us is working closely with regulators. Now, digitization, especially in emerging markets, it's picking up momentum, but nevertheless, it's still in its nascent stages. And as a result, many of the regulators, quite a few of them are hesitant towards moving towards a digital model. Again, as a regulator, they're probably thinking about security and safeguards for the policyholders, which is rationale. So as a result of that, a lot of our work at IFC and interaction that we have with regulators ends up being around educating them that what does digitalization really mean? What does it entail? And how can it actually improve the reach of insurance companies? How can it actually improve the insurance penetration rates in their respective markets? One of the ways we've engaged with regulators, which has been successful, is we've advised regulators in creating these regulatory sandboxes, which essentially provides an enabling environment for more insurtechs to start up by reducing requirements and startup costs for these companies. A traditional insurer, for instance, might require a huge amount of capital to start business. Whereas if you start an insurtech through the sandbox, some of those requirements are made more lenient to make you more able to enter this market segment. Lastly, I guess the third topmost priority area that we're looking at IFC is the increasing trend towards bundling and blended insurance. We're seeing increasingly there is a move towards insurance being sold along with other products, other mainstream products. They don't even have to be financial products, without the customer having to go to an insurance company. So just to give you an example, if tomorrow I were to go and buy a new car, I would get car insurance as a part of the price of that car. So I don't need to go to an insurance company to buy an insurance policy separately. I just simply get it as a part of the package. We've seen this example briefly in what Alphonsus mentioned in the projects that they engaged with through the GIIF program in Africa. So this is another key area that we're trying to delve into further and expand and see how we can get involved there.
Oh, to stay on that for a minute, do you have any areas or segments that are particularly important or relevant? I don't know whether it is resilience or climate risk or health insurance, or you are completely neutral in terms of the segments you are considering?
Thanks for that question, Jean-Stefan. So we're neutral. I mean, of course, it is very important for us to see a clear development impact in any investment that we make as IFC. And one of the cool things about insurtech is that, I mean, the business models that you see, all of them are innovative. All of them are so different from the status quo that you need to spend a lot of time understanding what sort of a market gap they're catering to and what kind of an impact they could have. So it doesn't have to cater to climate risk. It doesn't have to cater specifically to health insurance. It could be any market segment as long as we can see a clear development impact there.
Okay. So how do you support, what's the focus you have on financial inclusion, and how do you support financial inclusion through your investment? And maybe if you have some case studies you could talk about of some of the companies you have supported with regard to financial inclusion, which I know can be quite a broad category that could include a lot of different things. But I think it would be useful because it's, of course, one of the key issues that we are facing in Africa, but beyond Africa, particularly in Africa.
Sure, I'll take a stab at that. So I guess to be honest, currently as IFC, we don't have an existing insurtech investment in Africa. But said that, we feel that really the momentum is building up in this space in the continent, and we're following it quite closely. And we have high hopes from this sector there. With respect to, I guess, examples of financial inclusion, perhaps I could share an experience, an example, perhaps from outside Africa, just to give a brief idea around how we work. And then I guess we could move over to the example that Alphonsus shared earlier. In the GIIF program. I think those were more Africa specific, and they did deal with digitization and embedded insurance. I think it's very interesting, the examples in Zambia and Kenya. But I guess at IFC's end, a lot of our work usually goes along with our portfolio investments and the partnerships that we create with global strategics. A good example for us to talk about financial inclusion would be a recent investment we made in Indonesia with a platform which essentially embeds insurance policies. And these are micro insurance policies. And these are embedded on online e-commerce platforms, or they're embedded in ride-hailing apps. So to give you an example, the Uber equivalent in Indonesia, let's say you take an Uber ride in Indonesia, you will automatically be able to buy a ride insurance, which is going to be a very small, tiny amount, small coverage, because it's going to cover that particular ride. And that's something that we found a lot of passengers and Uber drivers were able to buy, and were able to find a lot of value from. Of course, with the COVID pandemic, that business kind of slowed down as the ride-hailing business has gone down quite a bit. But the same thing applies with online e-commerce stores. So the Jumia equivalent in Indonesia. When you buy a product online, you can buy warranty and insurance right there and then as you buy a product. And it's this platform that is selling and embedding those policies on those platforms. The access to insurance part here is immense because people who never thought about buying insurance are now seeing insurance right in front of their faces as a part of their daily purchases. I mean, if I'm buying, I don't know, a watch online, I get an option to buy insurance. And this is increasing access. Maybe I'll pause here and perhaps I'll give Alphonsus a chance to speak about our experience in Africa.
Yes, please. Alphonsus?
Yes. Yes, thank you very much, Jean-Stéphane. And taking up from where Zishan ended, I just want to come back to what he said about the importance of the insurance sector to capital markets development. You know, the insurance sector is necessary to mobilize the resources that eventually are invested, you know, in long-term finance for productive investments across the continent. You will find that in many countries, for instance, I give you an example where I am in the DRC, where it is considered that a one-year loan is a long-term loan. So it is very difficult to consider for a businessman to make any productive investments with a bank loan. So you also have a very underdeveloped insurance sector in this country. And that is because for a very long time, it was just a state-owned monopoly. That was the only insurance company in the country. So what we do at the World Bank is that we support the Ministry of Finance and the financial sector, and particularly the insurance regulator, first to try to liberalize the insurance sector and make it more competitive. And we also do that by building the capacity of the regulators, training them, you know, making sure that they have the tools that are necessary for them to work to supervise the insurance sector properly. Now, you talked about, you know, what examples you have for, you know, financial inclusion with through insurance. A very good example is what we discussed about the work of GIF, you know, and there are also a lot of microinsurance products that are available in the market, you know, which are offered, as Dishan said, you know, they're bundled with, you know, in the case of GIF products, sometimes input, you know, insurance is bundled with the sales of inputs. It could also be bundled with credit to a farmer. And they are also able to buy sometimes, you know, very low cost health insurance products that are issued in the market. And these are issued through, for instance, you have a bank like Equity Bank, which is a regional bank in which the IFC is an investor, you know, which has products that work in this, you know, they're able to offer insurance in, you know, to the very, very, very poor. And they bundle this with, you know, other loans that they, you know, they give farmers with whom they work. So those are just some small examples, or a few examples of how we operate in that sphere.
All right. So for the last part of the discussion, maybe I would like to focus particularly on how do you support entrepreneurs and innovators and startups? What sort of involvement, what sort of resources you are mobilizing, whether it is funding or funding those who are funding the startups and the innovators, and maybe discuss, for instance, what you have done with Oko Finance in Africa, how you supported them. So what's the firepower you are using to support innovators, entrepreneurs, and startups insurtech startups, whether directly or indirectly in Africa, or how you intend to do it? Zishan, maybe?
Sure. So yeah, it's a very interesting question. There's a variety of ways we engage with startups and innovators at IFC. So the first one is the more obvious one. We are a provider of growth capital to many entrepreneurs. We do this either directly through our own balance sheet, or we could invest in insurtech startups through our partner venture capital firms. So as IFC, we also have investments in other venture capital firms that also invest in insurtech, fintech sectors. So that's another avenue that we could explore. Now, with just a little bit more on how we look at investing in startups. So when we're looking at direct investments, generally we like to see businesses which already do have an established user base and have shown good traction, which usually ends up being startups who are raising a Series B round.
Mm-hmm.
So the very early stage companies, we wouldn't necessarily invest in them, but that doesn't mean we can't work with them. We can work with them in other ways. But just to complete the loop on the funding part, so we look at Series B companies, and exceptionally, we might look at Series A funding rounds as well. The two key things for us when we're investing in potential insurtechs, first and foremost, is how does the product serve an uncatered need in the market? I mean, what exactly is the market gap? What's the product doing to solve that problem? And that takes quite a few conversations with founders, and probably the most interesting part about my job. The second thing is differentiation. So how is the product or the idea that the entrepreneurs are pitching to us different from what anyone else is doing out there? Either that, or how is it differentiated enough that no one else can replicate it? We live in an age of technology where things can be replicated quite quickly. Why should we bank on one entrepreneur as opposed to another? So we need clear understanding of how they see their model, how it is different, what barriers of entry are present, and how well these guys can execute. And that becomes extremely important for us when we are speaking and engaging with potential investees. In addition to providing capital, another area of support is we regularly interact with insurtechs, and on a need basis, we are able to help them get introductions to other insurance companies or other potential partners within the insurance value chain. So to give you an example, we are currently in talks with an insurtech out of East Africa, who we haven't invested in yet, because they're a bit earlier stage than we like, that basically we can invest in. But at the same time, we have introduced them to a global strategic insurance partner of ours, which enabled them to form a partnership to now enhance their product offering, further refine it, and now they're reaching a much broader market. And in fact, they're now raising another funding round later this year, for which we can consider them as an investee company. So they're bigger now, they're at a later stage, and they're expanding their presence more regionally. So this becomes a very valuable tool that IFC can bring to the table for potential entrepreneurs and insurtech companies. The ability to introduce them and help them globalize their businesses. Another area is providing expertise. We find that a lot of insurtechs are are founded by really driven, very smart people who may not necessarily be from the insurance sector, but they're excellent at executing an idea. However, insurance tends to be a fairly technical space. So in that area, IFC has a team of insurance specialists that could then work with these insurtech entrepreneurs and founders in providing them strategic guidance, in providing them technical help around how products should be, how they should manage their risk better, what target segments they need to focus on, so on and so forth. So that technical expertise come in very handy. And then finally, governance is an area. This is something that we focus on more so with our investee companies, but we help our portfolio companies improve their governance structure just to ensure a more sustainable business environment. So hopefully that kind of gives you a flavor of how we support. I don't know if Alphonsus has anything to add to that.
Alphonsus?
Yes, I may just add that, the difference between maybe what Zishan does and what we do is that the IFC works directly with private sector companies. And at the World Bank, we work with the government.
Okay.
So you have a government. Let's take the government of Gabon. They're interested in promoting startups, which may or may not include fintechs and companies in insurtech and all of that. So what we will do is we will work with the government. We will provide a lending facility to the government, and then provide technical support. Sometimes, we would run business plan competitions, and then the winners may be, put through incubators that the project is able to, fund. So they are trained, and eventually out of these participants, some of them will come out as, with good ideas and projects that eventually people like Zishan could then take up and fund it. So that is how we operate. They operate directly with the private sector, but we work with the government.
Okay.
So we lend to the government and we work to support the government's projects and ideas.
Okay. So my last question is probably, as it is the tradition, the most difficult one, and we have 5 minutes to address it. We discussed this morning with some of the panelists. It's something I can attest also from my work in Africa. There is, and the podcast I'm hosting, there is a real problem in terms of French-speaking or Francophone markets in Africa with regard to investment and support to innovation and entrepreneurship compared to other parts of Africa, particularly English-speaking Africa. And one of the issues is the access to funding and the access to also, in a way, to other African market and international market, but it comes from the funding issues. It's a real, you also have some differences in terms of the culture of entrepreneurial culture, digital culture, and so on. But do you have any tools or any way to ensure that the money you might be investing or supporting others to invest is spread, maybe, if not more evenly, in a way, that allows to bridge a little bit the gap between Francophone Africa and Anglophone Africa. Is that something you have also considered and that you are witnessing, or do you think that this is something different that on which you are not necessarily able to intervene? Basically, how do you ensure that funding and innovation is spread evenly in your action across the whole of Africa without more priorities given to English-speaking countries or Francophone countries, etc.?
Okay, Zishan, if I may start, I would, I could quite clearly say that, the World Bank is, totally, language blind, or culture blind, if I may say so. When we work, we work as much in Lusophone, Anglophone, Francophone countries. Personally, I'm Anglophone. I've worked all my life in the World Bank in Francophone countries, and I don't think there is any difference at all. It's just a question of, there's some Francophone countries that are very innovative. That, take the case of Gabon. Digitalisation in Gabon is, I think, among the highest in Africa. And then, there are other areas, because of various reasons, they have other challenges. So, which are not necessarily based on, being Francophone, Anglophone, or Lusophone. So, but that said, if you look at the recent development of fintech, even in the world, even in if you went to the European Union, fintech developed more in England, in the UK than elsewhere. Fintech has developed, the regulatory environment has been more favorable to fintech development in the UK in particular than even in the United States of America. So this really, it's not just a question of Francophone and Anglophone. We have no bias at all, and we seek to support all our member countries, based on the need and the priorities. But as you know, at the World Bank, our biggest challenge is fighting poverty. And the Digital Economy for Africa initiative, which I mentioned earlier, is a big priority for the bank, because digitalization is an opportunity for Africa to leapfrog forward. So we do support that across both Francophone, Anglophone, and Lusophone countries. Thank you. Zishan?
Thanks for that, Alphonsus. And no, I absolutely agree with what you just mentioned. Just echoing Alphonsus's sentiments, a couple of things come to mind. It's a very thought-provoking question, Jean-Stéphane. Thank you for that.
Well, maybe if I can interrupt you, I hope I wasn't misunderstood. I wasn't saying that there is a bias from the World Bank Group or the IFC, but there is a reality that it's more difficult, and that's not your fault or a bias, but it's more difficult to raise money when you are on the French-speaking or Francophone market in Africa than when you are in an English-speaking market in Africa, for many different reasons. The economies of the countries, possibly the fact that a lot of the people that are funding innovation are from Anglo-Saxon countries. So this could play a role, but I wasn't at all innuending anything about any bias from the World Bank. It's just a reality, and I just wanted to see with you how you can help bridge the gap in terms of the funding particularly.
So I think the first point that comes to mind here is that at IFC, there is a clear strategy now where there is an enhanced focus towards more frontier economies. Basically, these are smaller markets which are in need of funding. This strategy basically has been in place for the past 2 years, and this is something that at IFC we're working on further. It's not perfect yet, but it's going to take some time for us to get there. Said that, I mean, so one of our most successful insurance investment has come out of Francophone Africa. So. And the success has been basically the company going pan-continental, pan-African, right? And this is a good segue to the second point I would like to make. But when it comes to fintech, I think one way there could be a more equitable distribution, maybe if not directly of funding, then at least of impact, could be by the potential of fintech being, or insurtech more specifically, being more cross-border, not being bound by borders. A lot of insurtech technologies can be implemented in many different regions and countries quite seamlessly, at least more seamlessly than, let's say, a traditional insurance business model. This is something we're seeing with some major insurtechs in Africa. The example I mentioned earlier, it's doing the same thing. So by moving more pan-African in nature and expanding across the continent, I think the impact could be a lot more well distributed across the continent. So hopefully that kind of answers that question. But this is an interesting insight into the sentiment out there, and yeah, we need to think more about that clearly.
Yeah, absolutely. It's more than a sentiment, to be honest. It's a reality. And when you talk both to insurance companies and startups, like I do with the podcast Africa InsurTech Rising in Francophone, you realize that there is really a gap and an issue. And again, there are many reasons that can explain that. Another issue, and you just hinted on it a minute ago, is linked to the difficulties, and it's true for everywhere in Africa, but a little bit more again for French-speaking Francophone Africa and North Africa, is the difficulties to cross over and scale up across Africa, which I think could change with the new regional and Pan-African integration, economic integration that are developing at the moment. So that could be a great help. But still, you can have all the integration, all the OEDA African laws that are harmonized. If funding is impossible to find in some of the countries, or very hard to come by, or if you have conditions in terms of creating a companies that are so taxing, without doing a bad joke, that it's almost impossible to face the bureaucracy, there is a point where innovation is going to falter a bit. And clearly there are some countries that are probably less bureaucratic than others, where it's easier to create a company, et cetera, et cetera. But this is a really big issue for the startups to be able to scale up across Africa. Not saying that it doesn't happen, no, and it's changing, which is great. But still, it's still a bit difficult. Gentlemen, I would like to thank you so much for the time you dedicated to us, for being an amazing partner on the conference, and for how interesting your thoughts and your discussion was. So thank you so much. Thank you, Zishan. Thank you so much to Alphonsus too. And this is closing the World Bank and IFC part of the conference.